Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 8, 2023. Hope you're all doing well. In today's segment, we'll take a look at how to buy technology stocks which are beaten down. So look, as the technology stocks are beaten down, it could be great time to buy some good technology stocks for the long haul. And if you're options trader, don't worry. We'll also look at some great options trading strategies for the technology stocks. So with that, let's jump in and get started. Look, the way this spreadsheet is organized is we got section on the top here. These are really additional information for each row because we don't have too much real estate here. For each row, for example, Apple, I'm showing some additional information on the top here. As an example, we got Apple here, and look, we got target price for Apple, which is 176, and number of analysts covering Apple, which is 23. The rating right now from analysts, strong buy. That's how you will read this. And you might wonder, where did this data come from? Look, I love to compile the data. I look at multiple sources. I look at the data from TradingView, which is a great platform. It gives a lot of technical data and some fundamental data. Then I look at stockrover.com, which is a great fundamental website. It tells you what are the great fundamental companies. If you're a buy and hold investor, Stockrover is a great platform with great scanners. And then I look at barchart.com. This is where some of the options data will come in. Or I also look at fintel.com. That's where some of this volatility and especially the short squeeze type data comes in. So with that, let's jump in and get started. The reason Excel is very handy is because you don't have one single scanner which provides you all the information that you need. For example, FinViz, great for scanning with the basic scanner. And you got Stockrover, great for a fundamental. You got bar chart, great for options, and Fintel, which does some of most of a couple of these areas very well. So there is no single scanner that provides you all the information. I know a lot of people search for a single scanner to provide stock data, option data, and even short squeeze type data. That does not exist. I've looked around, there is no such information available. So with that, let's jump in and get started. Look, we'll start with the great beaten down technology stocks to buy. So I will start with just auto filtering this whole spreadsheet here, so that way we can look at some great data here. Look, we auto filtered here. We got some great companies. Let's focus in on technology stocks. I will go all the way to the right here, and I got sector information right here. I will select technology sector. So that's our focus in today's discussion here. So let's go down here and go into technology. So now we are selecting the technology stocks, and look, now we are down from 2,800 stocks to just 434 stocks. This will be our technology stocks that we will be looking at today. And of course, we will basically narrow it down and look at the great stocks to buy, because nobody can buy 424 stocks. You could rather be buying S&P 500, or in this example, you could buy XLK, which is a sector ETF for technology. So with that, let's narrow down our criteria and go from there. Look, I want the stocks I will be buying to be fundamentally sound. I want to make sure the gross margin is more than 30%. I will just go in here and say gross margin greater than or equal to. I'll put in 30% here. Look, now we are narrowing down from 424 stocks to just 341 stocks, as you can see here. That's not good enough for me. Let's jump in and look at the net margin. I want net margin to be, positive. I don't want net margin negative companies, especially in this market situation here. Let's jump in here and say greater than or equal to, let's say 0. So that we will look at positive net margin companies. These are all, positive net margin. These companies don't lose money. All right, so now we got few companies that are, you know, you know, have a lot of debt here. Debt is one thing you got to be a little bit careful. What I would do is I would look at current ratio here. Look, current ratio for Apple is 0.9. Typically, I would look at current ratio, more than 1. But just to leave some room for Apple here, I will do current ratio more than 0.7 here. So that way I don't exclude Apple here. It's a great stock. All right, so we got Apple also here. Now we came down from came down to 178 stocks in the technology, and let's even narrow down further here. Look, few stocks here. Look, Nvidia, it's got quarter over quarter sales growth. I think off late it came slightly down here, negative 17%, and few companies like Intel here. Intel also has got negative quarter over quarter sales growth and also 1 year negative sales growth here. So what we'll do is sometimes quarter over quarter data keeps changes, and let's go with the 1 year. I want 1 year sales growth to be more than 5%. We'll go with that. So that way these are the companies which are growing their revenue or sales. Let's just put in 5%, so we'll whittle down further. All right, so let's jump in and say 5%. All right, let's see. We actually there you go. So we came down here to 125 stocks, as you can see here. And next we'll look at few more things here. Look, we got RSI. To look at the beaten down stocks here, you got to look at relative strength index or RSI. When the RSI is below say 55, it's a great time to buy those stocks here. Let's jump in here, and I want really beaten down stocks. I would even say RSI below 50, so that way we look at beaten down stocks here. Let's say here, and let's go in here, say less than or equal to 50. I want beaten down names here. All right, now we whittled down the names here. We are now down to 125 stocks here. That's a good, actually now it's 56 stocks, as you can see here. So from 426 or so, we came down to 56. We could even look at a few more criteria to whittle down this list and go from there. So look, we got some of the companies. Keep watching the debt to equity ratio here. Look at NXP, Autodesk. Some of these companies have got a little bit higher debt to equity ratio here. We want debt to equity ratio typically to be below we don't want very high debt to equity ratio here. Look, we got 1.6, 2.5, especially Autodesk. We could whittle down further and say debt to equity ratio is below 1. So we could easily do that. Look, we got some companies with very high debt to equity ratio, as you can see here. So let's jump in here and look at debt to equity ratio here, and let's say less than 1. We got debt to equity ratio. Let's see here, right here, we could say all right, so we got that taken care of here, and now we got some great companies, as you can see here. And you could even further look at some of these criterias. For example, we are at 52 right now. You might say, what, I want to look at positive net margin companies. We could just do that. We could go all the way down here and look at the free cash flow is one of my favorite topic here. Look, we got free cash flow here. You could look at positive free cash flow companies, but look, companies like Infosys, which is a great Indian company, we would leave that out. I would not go for that right now. And we got free cash flow, same story. We got some great free cash flow here. And look, we got some companies with negative free cash flow here. I would not like to trade negative free cash flow companies. Look, we got some Chinese names here. So what we'll do is free cash flow positive companies, so that way these companies don't drain money. let's say greater than or equal to, and say 0. So these are the positive free cash flow companies. And now look, we are down to very handful of companies here, not too many companies. I think this is a great way to start here, all the way from 428 stocks or so, 426 stocks. We are down to 40 here, and this list is sorted by market capitalization, as you can see here. Top of the list is Microsoft here, again a great company. And if I click on Microsoft here, you get some great information here. Look, Microsoft right now, as you can see here, from a Morningstar perspective, growth grade is B, profitability is A, finance perspective they got a tip top finance grade B here, which is great. And from a Piotrowski F score, which is great to look at the books and how is the accounting doing. Their accounting is doing great. It's more than 5, tells you it's great. Altman Z score, which is the industry standard for financial strength, is 7.4, which is superb. Anything over 3 is great. So I would say it's a great one to buy at these levels here. And if you're if you want to buy the stock here, you could buy Microsoft. Look, they got a lot of cash. Look at the cash here. They got $107 billion of cash, which is great. They got some debt, which is completely manageable, not a big deal here. And look, free cash flow positive. Their free cash flow is $63 billion, which is great. So I would, I would also look at the revenue growth here. Next year, revenue growth projection is 13%, and next year earnings per share projection is 17.1%. So it's doing great even projection perspective. Analysts are projecting a positive growth for this company. And look, 25 analysts are covering this stock here with the rating of strong buy. So you could go with this here. And they also have a nice sales growth here, 1 year 10%, and as you can see here, we got 5 year 16%, and it's a good sales growth also. And if you look at the simple moving average, I have simple moving average here. Look, from a simple moving average perspective, we got all the way back to 200. Right now it crossed 5. It's actually below 5-day moving average by 2.7%, and below 10-day moving average by 4.1%, and even below 200-day moving average. So at this time, because the stock is coming down slightly here, I would be I would be buying this stock slowly, because it's a great company. Technology will come back slowly. It's a good time to buy. And also look, we got earnings coming up, 124, which is just around the corner in 2 weeks or so here. So if you want to buy some Microsoft, I would buy some slowly now, and buy some after the earnings. So it's a great way to buy a company like Microsoft. And look, from a performance perspective, we got Microsoft performing pretty well here. We got 2021 52%, stock appreciation. 2020 they have done great, 43%. 2019 58%, but 2022 last year they're down 28%. But compared to other names, it's great. I think it's a good one to buy at these levels here. And look, it also pays a small dividend, as you can see here, 1.20%. And ADX 13 tells you it's stock is not moving. It's very low. ADX tells you it's in a consolidation mode here. You could slowly jump in as it consolidates. All right, that's about Microsoft, which is one of my favorite stock. And look, one more thing to look at is if you're an options person here, look at the IV rank. IV rank is very high, which is 55.36. Because IV rank is very high, if you're an options trader, you could sell some put option. One of the great ways to sell put option is to look for a high IV rank. This checks out here, high IV rank, and look for a low RSI, 36. It's a low RSI, and RSI in 7 days even lower, 29. That checks out. And you might wonder, hey, you know what, I got it, but tell me what strike price I should choose. So for choosing the strike price to sell, put options or even call options for that matter, my favorite way to look at it is by looking at the support level. There's a Woody's support level. This data is coming from TradingView.com. I will take you there in a while and show you how to look at this here. Look, from a support 1, it's 228, and right now look, stock price is 224. We are already below the support level 1. Support level 2 is 216, and support level 3 is 198. So if you want to sell some put option for Microsoft, I would go maybe around S3 or support level 3 here, and I would be selling put options for Microsoft, especially because of this high IV rank. And we could go into that in a minute, and I will show you, and we can look at how to sell put options. In fact, I can take you right there right now. Let's go in here to my favorite tool, and let's go into Microsoft. All right, so in Microsoft, as you look through here, I'll take you to the chart here so you can look at the chart. Look at the Microsoft 18-month chart. My favorite platform, Thinkorswim. It's a great platform here. You could look at IV rank. You could just show on top here. We got RSI and VWAP. And look, what I've done is I got simple chart, nothing fancy. I got Bollinger Band on the top here. Look, this is a Bollinger Band, as you can see here, a red band at the top and a pink band at the bottom. That helps me understand what's going through from a volatility perspective. And also most traders leverage the lower band as a support level and the upper band as a resistance level. As it comes below the lower band, you could buy some call option. As it goes over the top band here, you could sell. You could buy some put option, or you could even sell some call option. That's how you could trade. But important thing is to understand the implied volatility. Look, IV rank for Microsoft right now is 38. So when the IV rank is 38, this is a good time to really sell some, actually buy some call option here, mainly because IV rank is low here, 38. Look, we got IV rank 38 here. So look, in this strategy, mainly because this platform here, Thinkorswim, provides you accurate IV rank here. I would be looking at, looking at a buying opportunity here. I would be actually buying a call option, mainly because IV rank is low. So with that, you could go in here to trade tab here. When you want to, buy a call option here, be slightly careful because earning is coming, so don't buy all call option right now. You could go 40 days out here and just go in here. So as you go through 40 days out here, look, we got nice looking trade tab here. And if I go back to my spreadsheet here, look, we got S3 here, 198. That's my support level 3. If you want to buy call option, I would go around support level 3 here. All right, let's go here to support level 3. That's good. And look at the delta. Delta is very important when you want to buy call options here. Keep watching delta. We got delta right here, as you can see here. I love to sell. I love to buy call options around delta 70 or so. The way to think about this is really when you buy a delta 70 call, it's as if you're owning 70 shares of Microsoft here. That's how much power this will have. Even though it's it's for 40 days in the future, you're controlling as if Microsoft, you're holding 70 shares of Microsoft. That's how you think about and go from there. And I would just click on this here. I would just go buy Microsoft. And one more thing to think about for options buyers, always look at the open interest here. When the open interest is high, And also, you could look at the volume too here. Look, volume is low on this one here, but look, volume is higher down. As you go down here, volume is higher. So you got a choice to make here. You could go to higher volume here, or you could stay with delta 70 as we're talking about right here with the 12.735 open interest, and you could go from there. So look, you can also look at the the spread between the bid and ask here. In here, I would probably go here because bid ask spread is very low here, 20, 25, 20 to 15. I mean, it's not too low, but it's manageable, I would say, for a stock like Microsoft here. As you go in here, 1340, 1445, look, bid ask spread is a little bit high for Microsoft, as you can see here. And what you could do in this scenario is really you could click and buy here. You can click on ask and buy. Normally I would go to the mid price here to 2020. You will get filled around this price here. You would be paying around $21, which is $2,100 to buy Microsoft. You'll be buying it 40 days out. This is one way to play. And for most of you, I'm sure you want to buy a little bit longer term here. I would do the same thing too. You could go here a little bit longer term. When you're buying call option, you could go here, say 103 could be a good one here, and you could go here and do the same thing. Look at delta 70 or even 69 works, and look at the open interest here. And when you find a little bit higher open interest here, you could go and buy there. And look, we got 244, not too much open interest in Microsoft here. And normally you want to you want to go to a monthly expiration. That's typically better. I would maybe stick here and go into Microsoft is very liquid. You don't need to worry too much about Microsoft here. I would go around delta 70 or even 69 for that matter. Look, we got some volume coming through. Many times for these stocks, liquid stocks, the volume and open interest will be higher towards the maybe 40-day time frame here. Now we're into 103. That's why it's low. Don't worry. You could get filled at the mid price here. And some of you want to buy leap options here. If you want to buy leap, it's a great time here. Microsoft being beaten down here, you could even go here down to 376 or 250 here, which is way down the line here. And you could follow same methodology here. You could look, people have bought leap options here, and you could go here delta 72. It's a great time to buy some delta 72. Look at the nice open interest here. And even look, some folks have bought right here at delta 46. I will not go to delta 46 here. That tells you it's a coin toss here. I would stay around, say, delta 70, 65 to 70 range is my sweet spot here. You could say somewhere in this range here and buy a call option here. And one of the benefit of buying a leap option, as many of you know here, leap options are great because the intrinsic value, it holds up pretty well, and the time value that you pay, for the option is less. As an example here, look, we got $224 for Microsoft here, and you're buying 200 strike price here. 200 plus 24 is 224. It's almost 225, and you're paying $47 here. So look, even though price difference between 200 and 224 is about $24.93, you're almost paying double that money to buy this, because there is some intrinsic value which is $24.93. The remaining is extrinsic value. So as you go toward the leap option, the extrinsic value or the time value, as you call it, will come down drastically compared to the options which are near the money. That's why I recommend buying these leap options if you're a long-term buyer, because you don't pay too much for the time value or the extrinsic value. And at this time here, with the stocks like Microsoft and tech stocks beaten down, it's a great time to buy these beaten down technology names. They will come back with a vengeance as you go forward. All right, so one more thing to think about is I love this option statistics. It's a great one in Thinkorswim platform, as many of you have noticed here. Keep watch here. We got total calls here. It kind of tells you on Friday, this is for Friday, what the total calls and what's total puts here. Just by looking at it here, folks are really buying more put or trading more put. Put call ratio is 1.06. That tells you almost equal number of calls and puts are being traded, maybe a little more put options traded than call options. And then you would look at traded at bid or below here. Look, 35% are traded below bid here, and 35% traded at ask or above. It's a dead heat here. If you see more percentage traded at bid or below, that means folks are a little more bearish and they're paying a little bit less money, or even they're selling some call options here. The moment you see folks are trading at ask or above, that tells you these are the buyers. They're buying. In this case, for Microsoft, buyers and sellers are almost equal. That's why you see the PC ratio, put call ratio 1.06 on Friday. And then you would look at the same thing on the put side here. On the put side, look, we got traded at bid or below 31%, and traded at ask or above is 24%. These folks who are traded at ask or above, they could be buying some put options here. And look, these guys may be selling some put options here, traded at bid or below here. So that's how we could think through about this here and go from there. Microsoft, it's really a wash. And look, we got current IV percentile here, which is really IV rank, which is 39% for Microsoft, as you can see here. Well, all right, so with that, let's jump in and look at a few more names here. Look, we got Microsoft here. You could do same thing, my favorite stock here, NVIDIA. And one thing I noticed is the IV rank here is 55, which is from bar chart, whereas Thinkorswim platform is showing the IV rank as a little bit lower, which is 39%, 39%, which is a little bit lower. So it looks like the data from bar chart probably is it will get updated probably over the weekend. That's why it's slightly high here. And then you could look at NVIDIA. NVIDIA is one of my favorite stock here. I love NVIDIA. Let's look at NVIDIA here. Look, from an NVIDIA perspective, the IV rank here is 24.55, which is you can see right here. And if I take you back to Thinkorswim platform here, and I'll put NVIDIA here. So NVIDIA in Thinkorswim platform here, IV rank is 18.2, which is very low, as you can see here. So it's very low. So I would be even buying the call option even for NVIDIA, given IV rank is low. So with that, look, NVIDIA is a great stock here. They had some the revenue or revenue came down slightly, but don't worry. Look at their future. As you look through here, we got next year revenue up. Projection is up 8.9%. Next year EPS up 32%. Great. And their Piotrowski F score tells you the status of their books is 6, which is above average, which is great. Altman Z score, the industry standard for financial metrics, is great, 13.6. I would not worry about this stock here. I know there is a lot of worry about semiconductors in general with the chip glut. I would not worry too much. I would slowly buy some NVIDIA, which is a great name here. Look, they've been putting up nice sales, as you can see here. From a Morningstar perspective, they get a grade B for growth, grade C for profit, and grade B for financials. nice free cash flow as you can see here, and they got nice cash on hand. They very good cash. I think they can do well. And look, last 5-day, 10-day, they've been going higher. Look at the moving average here. Current price is 2.1% above 5-day simple moving average, and 1.7% above 10-day simple moving average. They even crossed their 100-day moving average by 1.5%. So stock is improving, as many of you have noticed. And they also pay some good dividend. I mean, not great dividend, it's very low dividend. And look, even though they have got nice debt here, they are paying very low price for the debt, just 2.2% interest rate for the debt here. That tells it's a good one to buy at these levels here. I would buy Nvidia. And for the folks who want to look at, hey, what price I should buy Nvidia, see, look, we got S1, S2, S3 here, which are support levels, and you could take this as a guidance for you. You could look at either S2 or S3, and as always, like we did earlier, right, you go around delta 70 and buy call option. If I go here very quickly here, I could go trade tab and put Nvidia. I think we already have it. And if you want to buy 103 days out, that's good enough. Go to delta 70, and look, we got delta 70 right here. 69 works out here, and look, I think the 65 has got more open interest here. You could go to delta 65 here and buy this one by paying around $22.50 or $23.50. If you don't want to pay too much money, or if you're a little more conservative, you could buy a spread here. You could just go here and buy a spread and go vertical. Right now price is 148. You could say 145. You could buy at 145 and sell at 150, 155, which is $10 wide spread here. So that could be a good way here. You could go right here 155 and once 145, 155, and go from there. Look, $10 wide spread, you're paying $5.10. Remaining money is your profit potential. It's a great way. And if you want to look at the profitability of this, I got my favorite platform here, which is optionstrat.com. You could go into optionstrat.com here, and you could just analyze or optimize this trade here. And you could build a strategy. I would say we are looking at Nvidia right now. I would say Nvidia, and I would really buy we are doing a spread here. We're buying a call spread, as you noticed here. We are doing a debit spread, and I would do 145, 150 spread here. I would add. Okay, we got our spread right here. We could do 145. You would be buying, and you would be selling at 155. You're looking at this spread here, and look, the moment you do this spread here, let's see here, we are Nvidia call. We are buying at 145. And we are actually selling at 155 minus 1, as you can see here. Look, chance of profitability for these spreads is 48%, which is good enough. And your max loss is 492, and your net debit is 492, and your profit potential is 508. Double your money type strategy here. You could go with this here. It also has some news item, as you can see here. Generally, semiconductor stocks are down here. This could be good time to buy some of these great names for the long haul. You could even buy some leap option. We looked at call spread here. You could do all the way out and buy some leap option. The moment you buy leap option, either at 250 days or 376 days, you could go to delta 70 or so here, my favorite time frame here. You could just buy by paying around $41 here. And if you don't want to pay $41, you could do spread also, maybe a $20 wide spread. You could do that too. It's a great way to play a stock like Nvidia. and go from there. All right, so let's go back here. We got a few more names. I will not look at all of them here. Same strategy applies here. All these are great stocks here. But if you want to still whittle down here and look at, I don't want to look at, profitability. I want to look at higher profitability. No problem. We could just go down, whittle down this further here. Look, we got some of these stocks with profitability C here and D. I would whittle down further here. I would say I don't want profitability just A, B, C. That's pretty much. I don't want D. I don't want F. Now we are whittling down further and looking at profitability A, B, and C here. And that's a good one here. Now we are whittling down further. As you can see here, we just have 24 stocks here, all great ones here, and profitability is good. Look, it's Microsoft, Nvidia, Accenture, Adobe, Now, which is ServiceNow, and EPAM, which is one of my favorite. And look, very short list here. You could look at some of these names here and buy them slowly and go from there. And if you want, look, we got RSI here. We could even do RSI here. I think we already filtered it down here. I think this is a great list to start with here. And some of you might be wondering, this is a great list. I don't have a spreadsheet like this, but can you help me to do such a list using TradingView? Look, TradingView is a free platform. You could do many of these things in TradingView. I will take you to TradingView here. Look, in TradingView, I got my technology scanner here. Let me show you my filter. You could look through the filter here. Look, from a filter perspective, very simple here. I have my average 60-day volume, more than 1 million shares traded. I want to make sure the stocks I'm selecting are very liquid. And from a symbol type, I just included some of these things here: closed-end fund, common stock, ADR, and so on and so forth here. No ETF, as you can see here. Very simple criteria. You could do the same thing. And from a sector perspective, look, TradingView is a little bit tricky when it comes to sectors and industries. So for this technology scan here, I would choose electronic technology and technology services. That should give you most of these technology companies. I would add these to my criteria. And then we got here average 90-day volume. I want average 90-day volume to be more than 1 million shares. We don't even need average 60. I could drop this because we got 90-day here. All right, so now we got a relative strength index. I want to make sure these stocks are sold off here. That's why we got relative strength index below 55. If you're conservative here, I would say below 50 is great. Let's do below 50 so we can look at even smaller names here. And gross margin, I want the gross margin to be above 30. As you can see here, I love to look at the higher gross margin companies. And ATR, or the average true range, I want this to be above 0.5. I want the companies to move and not stay stagnant. And net margin is above 5. I want to make sure the companies have got net margin more than 5%. That's a simple criteria here. We whittled down pretty much, and now look, we got just 36 stocks here. And in these 36 stocks here, you could look at these names here and buy them slowly. And this is a great platform, as many of you know here. And if you want to buy call options here, you could add one more filter and go here. If you want to buy call options, you could just put volatility as a filter. We got volatility in this platform. You could look at this volatility here. You could say volatility, say below or equal to say 3. That should look at some low comparatively lower volatility stocks here. Look, we got few names here with the low volatility. Look, we got Microsoft, a great name here. You could look at this one here. Electronic Arts, which is beaten down. That's a great one also. We got Akamai, which is one of my favorite stock. We got Trimble and DBX or Dropbox here. You could look at some of these names here. This is just for the folks who want to buy call options. And look, you might wonder, okay, call options, fine. tell me how to choose the strike. When you buy call options, the strike selection is very important. Look, I have my fundamental screen layout here. You could change screen layout very easily. Look, in my fundamental screen layout, I just have few things selected here, not too many things. So what I would do, if you want to look at the strike price selection, I would take you to my resistance and support, support and resistance screen layout here. The moment I go there, look, I got my resistance level, which is R1, R2, R3. These are the UD's resistance levels, and I got my support level here, S1, S2, S3. This is again UD's support, UD's pivot. If I click on it, as you can see here, let's see here, look, we got pivot UD R1, very easy to add. So if you want to buy call option for Microsoft, I would look at this S2 or S3 here. Current price is 224. You could look at around 215, or if you're conservative, you could look at say 198, and as usual, go around delta 70 like we talked about earlier. And this platform also tells you right now it's below 20-day volume weighted moving average here. That tells you it's in a downturn as of now. That's why TradingView is telling you it may be a good time to look at the short options or selling options, but it's a great stock for the long haul. You could buy some Microsoft here. And then I also added R1, R2, R3 from a fib perspective. This is Fibonacci levels here. You could look at same thing here. You could look at the support level from fib. Look from a Fibonacci perspective. Look at S2 and S3 here. Around 215 could work out here, which is about $10 below current price. That could be a good range to buy call options. As usual, look at delta 70 in your trading platform, and you could do same thing in the other levels here. And you could also look here, if you look at my layout for this support resistance, very simple here. I just have, support resistance. Where is my level? Oh, there you go. Fibonacci, S1, S2, S3, R1, R2, R3, and pivot UD, R1, R2, R3, S1, S2, S3. Very simple. I just want to keep it simple here. So that's about support resistance. You might want to see with the volatility. No problem. I got a volatility screen here, or a layout here. I think it must be somewhere here, volatility right here. So you could look at your volatility. Look, we got volatility right here. We got volatility, which is just volatility, and then you got weekly volatility, and we got monthly volatility. Look, right now current volatility is below the weekly volatility, and it's below 3, which is our criteria. That tells you volatility is low. It's good to buy this here. And you might want to look at screen. I love TradingView screen also. And look, I'll take you to TradingView screen here. We could close this one here, and we're looking at Microsoft as usual. Let me take you to Microsoft here. Let's see here. Okay, let's click on this here. All right, let me make this small. Look, we got Microsoft right here. So I got few things in the chart as usual. One is my Bollinger Band, as you can see here. This tells me about volatility. Right now, look, Bollinger Band exploded. That tells me right now volatility expanded slightly, and now stock went up slightly. And we also have this IV rank. To add Bollinger Band, very simple. Click on the indicator on top here, or press slash, forward slash. Look, we got Bollinger Bands right now. I just added that one. And then we got right here, we got RSI, very easy to add here. Again, same story here. Look, just click RSI. We got Relative Strength Index. You could add that one. And the third one, is IV rank. Again, same story here. Just select IV rank here, and we got here Sega RKO indicator here. This is a good one to add. So with these three, you should be set to go when you want to trade options. And look, right now we got here IV rank. Keep watching here. We got IV rank 75. You can also see on the side here IV rank around this place here. It shows 75. When I go here, you got to go all the way to the right side here. Current IV rank according to this chart here, according to TradingView and this indicator, it's 75. But it's always not the case when you go to Thinkorswim platform here, because Thinkorswim has got a little more latest information. If you say MSFT here, this one shows IV rank has 38.9. I would say, I would not be looking for absolute number. Instead, looking for whether it's increasing or decreasing by looking at the Bollinger Band. Volatility now it expanded. Now it may be going, down. So that's how you look at it and look at this platform here. All right, so we got a few more things here. You get the idea. These are the candidates here if you want to buy options. But if you're a stock trader, don't worry. You can just remove this volatility here. I could just click off this here. And look, we got 36 stocks that you could 36 stocks you could buy and take advantage. And if you want to do some more research, no problem. TradingView is great to do research. You could click on it and you could get some great information, just by looking at this. Look, I love TradingView because there are a lot of subtle features here. Look over here. It tells you 25. That tells you in 25 days there is an Apple earning coming up. So it's a cue for you if you want to sell some put options, sell some call, buy some call options as an example. You got to be careful because as we approach earnings, the volatility will increase. So it could be good time to buy slowly when the volatility is low, because volatility is going to go high around the earnings. Your call options will be more, they will increase in value. So that's a quick cue for you. And also look, we got some great information here. Tells you the range where it is, and I love this chart right here. Look, we got nice information here. So it tells you the earning. I love this here. Look, from a actual earning perspective, look, Apple did very well above the estimates. Again, same story, right on estimate. It's again right on estimate. Right now we are at a higher estimate here, and with all these holiday seasons, we got to see if Apple beats this, stock will go higher. If Apple fails to beat this estimate here, stock might come down. That's why it's a little bit risky to buy just before the earnings, because it's a coin toss or a binary event, as many of you know here, and it pays some good dividend. I love this chart from TradingView here. Kind of tells you, from a quarterly basis or annual. If you click on annual, how is their revenue and the net income. Look, Apple is doing great here. Net income positive. Revenue came down slightly. It always shows some shows some seasonality around the quarters. Typically Q4 is a little bit higher. Q1 is even higher. If you want to look at a little more linear view, I would look at annual here. Look from an annual perspective. Nice revenue up clip here and nice net margin. I like it that way. You could look at such names here and buy them for the long haul and go from there. So with that, we'll end here. Thank you very much. Happy investing and trading. Please subscribe.